Hello, Financial Hub traders. Welcome to another episode of our financial market breakdown. And today, here with me, I have our book, a template for understanding the Forex market. So, as you've seen, we've launched our book. We had this, but we were mainly selling it for the course packages. But due to many requests, many of you have been requesting, you just want the book to study the book on its own without any videos, without any subscription, anything. It is now available for only $25, and you can get access to this book. We've covered technical analysis, we've covered fundamental analysis, we've covered risk management, and we've also covered psychology. So make sure you get a copy of this book. It can really help you understand a lot about the financial markets, especially Forex market. We've just done an introduction basic to many other. We've introduced you to the stock markets, a bit of derivatives here and there, but we've mainly focused on the Forex market. As the title says, a template for understanding the Forex market, proven strategies for profiting in the Forex in Forex trading. So basically, just give us a call. You can get our number on our website. The links on the description below, and you can always give us a call so that you can get a copy of our book for only $25. If you want subscription for 1 month, you'll be getting our trades, our analysis, how we are looking at the markets every single week, which we do that on Sundays and Wednesday, and also on Thursday we do a weekly Forex lesson. You can always subscribe for only a monthly fee of $35, which will come inclusive of the book. So you get such sort of a bonus in line with the subscription for a whole month. Every week you're getting our analysis of seeing how the market is performing, our trades, the trades we've taken, and you can take the trades alongside us. Apart from that, we also have Zoom sessions on the subscription, which we do live online sessions with our students, with our subscribers, and it's a really interactive session, which you just add $10 to your $25. You get the book and you get the subscription. What a wonderful subscription package. So apart from that, today I don't have much to show you apart from the Forex market, so let's just dive straight into the chart analysis. So today I'll begin with gold. Looking at gold, we can see that we've had some bullish days, especially ending of last week. This week we're basically seeing red days, and the market has been shooting down. Yesterday we had that shoot to the upside. Market went all the way to 1760, and ever since market has dropped back down, settling at 1730 level. Okay, so what are we seeing? So this is the daily chart, following last week's very, very bullish close. If you go to the 1 week chart, you'll see it was a very bullish close, as you can see, that bullish close. But following to this week's analysis, especially yesterday's close, we're seeing that the market has shot above the 1750 mark and has closed down below, closing at 1735 level. Okay, so that rejection is very, very important. Do not ignore it. Looking at the market, seeing that this region over here, sorry about that, I meant to take this region over here, it's very, very important. Pay attention to such candlestick. Basically, on basics, that's called a shooting star, which basically indicates change in direction of the market. But so far, looking at the 4-hour chart, we broke out of our triangle that we had, the symmetric triangle that we had, and better seen on the 1 hour. Okay, let me just return back to the 4-hour chart. I didn't draw that line, so let me just duplicate this, and basically we're seeing that formation. So we basically had this formation. We are sort of in a triangular formation, a sideways movement that has lasted for about 2 weeks or so, and market broke out of that triangle late last week. Okay, so what are we looking at? What is happening to gold? Currently I have this channel formation, so let me just get rid of this. I don't want it confuse you. We can also get rid of this. So we sort of have this channel formation. So I just drew it from this point, touch this point, and I duplicated to the top part, and you can see market has been respecting it. Okay, so you can draw that on your chart analysis. Just pay attention to it. And what are we seeing? Currently market short above 1750, as we saw on the 4 hour. We saw the market close above, but before the day ended last week, we had this strong drop, and market today has basically been consolidating between 1720, around 1725, 1726 and 1735, between that level. Okay, so let's be very cautious on this one. I was paying much attention. I shared with the subscribers on our group that I'll be very attentive on this one. I was seeing bullish plays coming in later on in the week, but that strong drop yesterday and that close of the daily chart can make me sit in the sidelines for now, just to see what is happening to gold. This is a very volatile pair and it can really wipe out your account. So if you're trading this pair, be very cautious of what you're doing. Okay, so currently I have this support level that I'm watching at 1728. Market respected it last week. If you're watching the gold market last week, we broke up above that level, consolidated for a bit, then market shot back, shot further up. Currently we came down yesterday, rejected that point. Market tried moving further up. I didn't see any bullish buy on that one, and market has fallen back down, still rejecting that level. Okay, so if you get a break below this level, then we'll be looking for market coming back down, maybe to retest the trend line at this level. Okay, if we break below that level, we can be seeing, let's just put the arrow, let's put green. We can see such a formation happening if the market closes below this level. Taking your pivot points, you can see we're playing around the P level. Let me just get rid of this. You can see market has returned back to that point. My partner Taras Lawi shared this on the group with the Financial Hub subscribers yesterday, and showing how he took such a trade. I think it was either with the subscription or on his private Instagram pivot page on Instagram. So basically that's what we're looking at. You can see that pivot point level is what I'll be watching in line with that support level. So a break below can push the market further down, but if you continue remaining above, we can see further consolidation on this pair. Let's not be in a rush to just seeing the market trending. Market can also consolidate at this level for a while before we get that move to the upside. Okay, but looking closely, we're still respecting this 1 hour channel as well. I sort of have this channel. The market bounced here, and sort of created this inner trend line, but hasn't yet bounced off it. So if you get to see the market breaking below, that is what I'll be looking at this level, around 1715 level. So that's what I have for you on gold, and let's move on to the next chart. So next I'll be looking at oil. So looking at oil, we saw market crashed all the way to the $0 mark, and ever since that time we've had sort of a V-shaped recovery. Market has been shooting further up, still respecting Elliott wave analysis. We look at that, but looking at the way market came down all the way from the $66 mark over here, market respected Elliott wave, going 1, 2, forming that extended third wave correction to 4, then we finished with 5 all the way to the $0 mark. Okay, so now that market has opened back and it has rebounded, I won't lie, I have been really sleeping on this pair, and there was a really good opportunity, especially if you're a Elliott wave analyst. Those are very good analysis on this one. So you can see once market rebounded, this bounce over here, okay, you see this bounce, this was a 1986 support. Let me just zoom that for you. So you can see at this level, you see this level where market bounced off here. Let's just put that. It was a level that market had rejected way before, back in the 1800s. Let's look at that. You see this level, actually it was 1998 I mean, support level in line with the 1986 that I was talking about. So those are very strong support level at this region. As you can see, market bounced off there, bounced off here, and acted as our new support once the market opened after the crash. And as you can see, market rejected that level yet again and has shot further up, forming that sort of a hammer, that hammer formation, a double hammer formation at this level, and that was a very good indication for market to shoot further up. Okay, so after we had that, I was telling you I was really sleeping on this one here. It's because there was an Elliott wave analysis forming. Let's go to the what's that? Not the daily chart. Let's go to the 4 hour chart. And what you're seeing is this formation. Okay, so once we bottom out at that level, Yeah, we spiked when market opened yet again the following day. Market shot all the way down to that level, and the new month, basically this whole of May, market has just been shooting further up. We had that push to the upside. We got one first wave correction, that very strong third wave, got this correction on the fourth wave as a triangle, symmetric triangle, and market has shot further up. Okay, so that really helped the market continuing going up in terms of structure. Okay, so you're looking at structure in line with what is happening. If you look at UK oil, okay, so I normally analyze the two just to get a better perspective. UK oil was actually much man, I was really sleeping on this one, I'll be honest with you. I mean, UK oil didn't even bottom all the way to the $0 mark, but it was a good market to watch. Market bottomed all the way down. We also had that Elliott wave analysis coming down, as you can see, all the way when we were here at around 70. Market went 1, 2, got that third wave all the way to there, corrected 4, and we finished off 5 at that level. Okay, so now just coming up, I can't really be certain if the trend has changed from bearish to bullish, because this market has been bearish for a very long time. But even if we're bearish, where are we going? We're just dangling around near $0 mark. The market can't really stay below that level for a long time. So once economic activities start coming back, the lockdowns are lifted, then we'll be seeing demand coming back on the oil industry. We'll be seeing the oil prices shooting further up. So this one, same, we also had that 1, 2, 3. With this one, we had sort of a descending triangle formation, which was just a very beautiful formation. I was waiting actually for the market to come bounce off the trend line, but we didn't really get that momentum. Came back in late last week. Market has shot all the way up, looking for this resistance level. So comparing those two together, and then that now gave a better analysis when it comes to USD CAD. I was sharing this with my with the subscribers yesterday night, and if you just go down to that chart, USD CAD, that's gold, UJ, here we go, USD CAD. We can see when there's normally a lot of momentum, demand on oil, it really helps the Canadian dollar to gain more strength. And yesterday we've seen the Canadian dollar falling further down. I still expect it to continue dropping, but so far that's what has been happening. The the oil demand that has been happening even before the corona lockdowns uplifted was done, we're just seeing the the USD CAD shooting further down, meaning Canadian dollar has been gaining strength. In line with that, also technically apart, that's looking at it fundamentally, just comparing what is happening between different markets and how it's affecting another market. But looking at this technically also, I shared this with this pre-Sunday's analysis with the subscribers. I was looking at this pair falling further down if we maintain this formation of lower highs. So as you can see, we had a lower high at this level. So we had a lower high, another lower high, and we formed another lower high. And just like what happened over here, okay, so looking at what we happened here, market was falling down, came back up, sort of got that double top formation and shot further down. We're seeing almost the same thing happening here yet again. It wasn't a perfect double top, but market shot further down after rebounding off the downward trend line that we're seeing. If you look closer, we're also seeing that we had weakness over here, so market wasn't really pushing further up. Using Elliott wave analysis, sort of had that A, B, C, D, E. Had that E, market formed that diagonal wedge triangle and just shot further down from that level. So USD CAD, looking at the daily chart, I'm still looking at short pairs on this one. You can see this symmetric triangle has been broken, sort of getting that retest. I still expect the long time target that I was looking at for a while now, 1.3850 level. I still see it being hit very, very soon, especially after yesterday's bearish close. I'll be very, very bearish on this one. If we get that break below this level, then I'll be looking for the market to drop further down to retest this trend line that we're having. So that's what I'm looking at on USD CAD, in line with oil as well. Okay, so we just pay attention to how market will react around this level, and if we break below, then I'll be looking for that target to be hit. So currently I'm very, very bearish on USD CAD, and that's what I have on this analysis. So let's just look at one more pair and we can finish it off from there. So down to Euro USD, very bullish on this one. I'm just seeing dollar weakness around the board. You've seen USD card just falling off the roof. This one I was expecting the market to drop further down, I won't lie. What I was seeing is once we got this sort of formation, once we topped at this level, market came down with this momentum, sort of got this consolidation. So I just thought it was consolidating for a bit and then market can continue dropping further down, but we've seen that momentum coming in yesterday. Today we're just continuing with that bullish momentum. If you go down to the 4-hour chart, we're just shooting further up. The last 1 4-hour candlestick just closed very bullish, and we can see this market going further up. Okay, if you look at dollar index here, we're seeing also we had that sort of dollar weakness just forming the whole of, not the whole of last week, late last week we saw market just consolidating, not really forming new highs. I was expecting the market actually to come and drop from this level in line with this sort of resistance level that market has been bouncing off, but yesterday we followed this technical wedge analysis and market has just dropped further down. So in line with the other USD pairs, we're just seeing a lot of dollar weakness across the board. Aussie dollar has been shooting. I'm expecting it. I was actually very bearish on that one, but we're just seeing the market going further up, so I've taken a sit back from that just to see what it's forming on that pair. And coming down to Euro USD, we're just seeing it dropping in line, it going further up as the dollar index is showing a lot of dollar weakness. Okay, so for now I remain bullish on that. That's basically what I have for you guys. This Australian dollars, you can see this is what I was talking about. We're sort of having this wedge formation, ascending triangle formation. If this liquidity level is broken to the upside, then we'll be seeing 0.665 level being hit pretty sorry about that, being hit pretty soon to that level if that level is broken. But if it's not, let's just pay attention to this bullish momentum at this point. Once we break above, we'll give that indication that the market is going further up. But if you get a strong 4-hour bearish close going down, then be very cautious on this one. We might be getting a triple bounce from this level. Okay, so that's basically what I have for you guys today. I hope you've enjoyed. As I said, don't forget to purchase our book. Just get a basic understanding. Don't, right now especially that you have a lot of free time, don't just jump into the forex industry thinking you can make a lot of money. I'm just from talking to a friend of mine right now, and she was asking me about the whereabouts of how to get involved into the forex market. So my advice for you is first get the knowledge, and then don't be in a rush to make money over here, because if you're in a rush, it will be the fastest way you're going to lose money. So that's what I have for you guys. Don't forget to like, share and subscribe down below, and I'll see you guys next week as usual in our next technical analysis. So have a good week.
Economic recession and a bear market.
This is the time we tell you people to sit tight and watch the markets closely.